This morning, Jerome Powell and Christine Lagarde, as well as the Brazilian central banker himself, I don't know his name, I think his first name is Rafael. I'm not super into Brazilian central banking. However, it is still worth mentioning what was being said on that stage, which was really interesting this morning. This was during an ECB panel here, and that girl from CNBC, Sarah something, who has a lot of personality, was asking the questions we all wanted to hear. And she did a great job. And, what we heard was something kind of more dovish, I would say, than not. We heard from Jerome Powell, Christine Lagarde, and Jerome Powell still seems to sound a little bit more dovish than not, in my personal view. And the market seems to agree. You can see that the dollar index dropped pretty hard here after rejecting this 106 area again. Now, the dollar index we've talked about for a little while has been slowly chugging higher. And this has been off of the idea that, the U.S. central bank is not looking to cut interest rates. Meanwhile, other central banks are looking to cut interest rates. But what made this event so special specifically was that you had the ECB, maybe just slightly more hawkish, talking about, Christine Lagarde was talking about the strong PMI numbers in the services department for the European region. Let me show you that. So here it is, the PMIs for services in Europe. We've selected Europe, and you can see PMIs have consistently been above 50, showing some growth, which is good in terms of the growth of those parts of the economy, but it also is contributing to sticky inflation, which we've seen globally. We actually saw this morning higher than anticipated inflation out of Europe. And you can see here is the core CPI flash estimate year over year for Europe, and it was 2.9 compared to the forecast at 2.8. So inflation, upper two still for the Eurozone. And that, of course, was not actually a great thing for for gold. We actually saw gold shoot lower on that, out of Europe, but then swung back during this press conference, then swung back the other way. Gold is very volatile today, to say the least. What's also volatile is yields, and yields dropped pretty hard here this morning, today so far, which of course gives a little bit of way to the dollar strength. These two things are usually moving in the same direction. So we'll see what happens there. And back to growth for a second. When we take a look at GDP numbers out of the United States, we can see we have had a little bit of stronger than anticipated GDP growth, which has been a theme for months now. When we take a look at services in Europe, as I mentioned, it's hotter than, or still kind of showing some strong growth. Same thing with the US. By the way, we do get our latest round of services PMI data out of the United States tomorrow morning. Should be interesting to see what happens there. When we take a look at the euro against the US dollar on a daily chart, you can see, we had a big shoot to the upside yesterday on the euro, gave back some gains, went lower, and then recouped them here during this conference today. So overall, the euro does look kind of weak against the dollar on a price action standpoint, but we do have to acknowledge the dovishness that seemed to have come from Jerome Powell today. You know what also acknowledged that was the NASDAQ. The NASDAQ went way higher here, ripped higher off of the lows, even though we've seen a pretty, not huge, but a good sized drop from peak to trough. That was, a 2% overall pullback here. We have seen that bottom out, and with a higher low, the NASDAQ is looking strong, at least at the time of recording this video, off the prospect that rate cuts are still coming this year. In terms of the top setups page on the Edge Finder, we do still have the NASDAQ as a bullish reading. I was so close to pulling the trigger on a long position, but kind of missed it based on the technicals. It was close, but not quite close enough to my level. I am still long gold and bullish on it. I'm looking for an Aussie dollar potential setup, and all of this is again being generated by the Edge Finder's top setups algorithm, which looks at sentiment analysis like the commitment of traders data, institutional money flows, technical analysis, and economic data, everything from inflation statistics to labor statistics, and those precious PMI data points that I keep talking about. The software tool basically scans all of this data and generates bullish and bearish biases. And for me personally, at this point in my trading, I pretty much only take trades if the Edge Finder sets it up for me, and then I can find a nice technical entry where I can manage my risk appropriately, and peak risk to reward kind of is what I'm looking for in my personal trading. Speaking of the Edge Finder, if you haven't heard already, we're currently doing our biggest sale of the year. It's our summer sale, and you can get 50% off the Edge Finder. It is a massive savings, and I just want to say, person to person, straight up to you on the other side of this, if you are somebody who's thought about getting a copy of this and you're waiting for a bigger discount, there are no bigger discounts coming. This is your chance. If you want a copy of the tool for the lowest possible price, click the first link in the description down below. It will take you to a chat center where you can speak directly with someone on our team and get access and information about that discount, the promo codes, etc. But also, I want to encourage you to do this. The reason we have you go through a chat is so that if you have questions about the tool, which many people do, and you should have some questions about the tool, you can speak directly to someone trained on my team to answer those questions for you. So first link in the description, even if you don't plan on buying, ask a few questions, see if it's a right fit for you. And if it is, pick it up at the lowest cost of the whole year. Back to gold for a second. What we can see here is that gold is testing the upper limits of this downward trend line. I'm very curious to see with this dovish commentary, can gold kind of squeeze its way through here? The other thing, and this has been a thing for me throughout most of the year, I've acknowledged and talked about many times that it is an election year and there is uncertainty that comes with election years. And specifically, I think that whether you get Trump or Biden, that question for the market is enough to get gold to potentially get excited on that uncertainty. Remember that gold thrives when there is fear about prospective inflation or geopolitics in the world. Are we going to see a revitalization of Trump's trade war with China, which could cause some serious volatility? Speaking of which, let's go look at 2018 on gold, just out of curiosity. 2018 was a year in which we saw the trade war with China, and you can actually see that going into the year, we saw a huge pump on gold for the first several months. And again, then we saw a dramatic decline, and then it started grinding higher again. And this was actually pre-pandemic. We saw a grind higher into the end of Donald Trump's presidency. So we'll see if gold does see another kind of strengthening move to the upside off of fears around inflation and or geopolitics. But personally, I do think that it is a decent, it's not my only position in my account, but I like having gold in my account as a trade and or swing trade for the kind of hedge that it could offer should we see a slide in stocks or global sentiment in general. And Bitcoin is rolling over. I do still have a long trade on this one that I shared inside of our membership group. Stop loss is still in the same place, around 56,000. Speaking of stocks for a moment, here's the S&P 500 on a daily chart. And what we can see here is that things have just been very green. And every time it seems like we get just even a little bit of downside motion, buyers come in and they scoop the lows. I mean, this is a very aggressively bullish market right now. And for me, it's one of those things, I'm trading it until it's no longer there. But if we do get dips, I am a buyer. I mentioned earlier that I was looking for that NASDAQ pullback and didn't quite get it. I mean, obviously in hindsight, shoulda, coulda, woulda bought this area, but I was looking for the retest. Came very close, didn't get my entry. So I am looking for a chance to potentially buy the NASDAQ, even though, yes, the NAS is considered a bit expensive here. Momentum is really in favor of the bulls, and I will have a stop on my trade to control my downside if I'm wrong about this. I mentioned tomorrow that we get the PMI numbers out of the US, ISM Services PMI. We also have Lagarde speaking again, and we have meeting minutes tomorrow at 2. Tomorrow is a huge day, and we will be live streaming. Although I won't be there for it, I'm going to be traveling out of town for the 4th of July with my family, but we will still be live streaming. We've gotten several people planned to take over the live stream in my absence, which it'll be a great show. So stick around for that. Should be a good one. And then finally on Thursday, we have the parliamentary elections, which are huge in the UK. And finally on Friday, I said finally twice, but this is the true finally. Finally for this week, we have NFP on Friday, which will be, of course, massive to the market. I will be live streaming that event from a lovely home in Maine. We mentioned the UK briefly here. Elections are not just in the US this year. They're in the UK as well as in Europe. There is just elections going on all over the place. Again, this global election stuff also keeps me bullish on gold for the possible uncertainties that come with it. Anyways, the pound has been kind of weaker recently. It's up on the day. We'll see if that continues based on whether the dollar can kind of continue weakening or not. But right now, we are testing a level of resistance. I'm very curious to see if the pound rolls over, though I don't have any positions or ultimate bias on this one, as the Edge Finder does not have it on its top setups page. The Australian dollar, however, is a setup here, and I want to go back and talk about this one. I've said this a couple times, but on the daily chart, I'm looking for a break of the highs. If that happens, I'm looking for retests, for continuation plays, as Australian inflation seems to be sticky, and I do think that the dollar may roll over at some point if we do see U.S. economic data continue to slide. I also wanted to mention down below in the description, if you're looking to trade directly on TradingView, there's a couple brokerages that might be right for you. And specifically, the brokers that are linked in the description all can be traded directly on TradingView. They also have special sign-up perks for my audience. I've discussed with each one of these brokerages to set up my audience with special sign-up perks. So again, take a second. This is totally free game down below in the description. You'll also be supporting my channel if you choose to use those links, and I greatly appreciate it. Thanks for watching. If you're looking to improve as a trader, we've got some cool free resources here that I wanted to share as we close today's video. Down below in the description, there is a link to join our Discord channel or our Telegram channel. And we also have our website, a1trading.com, where traders can get access to free course material to help you improve as a trader. Remember, we are also live Monday through Friday on this channel around 9:30 a.m. US Eastern, broadcasting most live news events and that sort of thing. So hope to see you there. And also, we do have a couple videos here showing up on the screen. If either of these seems like it might be helpful to you, then make sure to click here or here, and we'll see you there.